Welcome to Retire Rich, Tales of Financial Freedom with Mark Hernandez and Carlos Lopez from M.A.H. Financial. In this podcast, we guide professionals of all generations, including Gen X, Millennials, and Baby Boomers, to answer an array of questions ranging from building wealth in 401k plans to selecting life insurance policies, including questions about IRAs, dividends, and bond alternatives. So tune in as South Texas's own financial advisors and fiduciaries, Mark and Carlos, draw from years of expertise, interview clients, and share stories of financial wisdom to accelerate your path to achieving your financial goals. Now, on to the show.
Welcome, listeners. I'm your host, Dave, and you're listening to the Retire Rich podcast. In the holiday season, the last thing on your mind is financial planning. And we get it. You're thinking about family time, food, what presents you're going to get your friends and family, New Year's plans, hot cocoa, the list goes on. Truthfully, you're thinking about all that too, but we're also carving out just a little time to make sure we're on track with our financial plans and making sure we're not missing out on key opportunities that could go away as the year ends. We don't want to make mistakes by not adjusting something before it's too late and it's 2026. That's why in today's show, we're going to boil down the key end-of-year retirement financial topics down for you so you don't have to spend too much time away from the things in your life that matter. Joining me today is Mark Hernandez, a financial professional. Welcome, Mark.
Well, thank you, Dave. It's great to be here to guide listeners checking up on their plans.
Okay, while they're checking up on their retirement strategy, people could be overwhelmed with news, options, and due dates.
That's right, Dave. Many feel what's called decision paralysis, and it's normal. But even thinking about these topics can put you ahead of the game. Let's discuss the main aspects of your retirement plan to make sure you check up on before the end of the year. First, let's talk about Social Security. Strategic Social Security timing is important. Delaying Social Security benefits from age 62 to 70 can increase payouts up to 8% annually, potentially resulting in a much higher benefit at age 70.
Oh, that's a significant difference. What about saving?
Well, you should review your accounts to help increase retirement contributions. Contributing the maximum allowable amounts to retirement accounts like 401ks and IRAs can significantly enhance retirement savings. Next, consider Roth conversions. Converting traditional retirement accounts to Roth IRAs can offer tax-free withdrawals in retirement, which is especially beneficial if you anticipate being in a higher tax bracket later. You should also review investments and income streams. Adjusting your portfolio to align with both your risk tolerance and income needs is crucial for financial stability.
Okay, what about planning for expenses?
Well, you must plan for healthcare costs. Anticipating healthcare expenses, including Medicare premiums and potential long-term care, is essential for comprehensive retirement planning. Also, manage debt. Reducing or eliminating debt before retirement can free up resources and reduce financial stress during your retirement years. And finally, estate planning documents. Ensuring wills, trusts, and beneficiary designations are current and can help in the efficient transfer of assets and can help minimize tax implications.
Okay, that's a lot to keep track of. But the good news is you don't have to go it alone. As financial professionals, we take an equally diligent approach to understanding your unique financial situation. Your retirement accounts can potentially be one of the pillars of your retirement plan, so let's dive into the specifics, starting with 2025 contribution limits.
Absolutely. For 2025, the IRA contribution limit for both traditional and Roth IRAs for individuals under age 50 is $7,000. But if you're age 50 and older, an additional $1,000 catch-up contribution is allowed, bringing the total to $8,000. For 401k contribution limits in 2025, the maximum is $23,500 for those under age 50. For individuals age 50 and older, they can make an additional $7,500 catch-up contribution, increasing their total to $31,000. If you are 60 to 63, the catch-up contribution is $11,250, which replaces the other catch-up addition.
And of course, those contributions will slightly increase in 2026. Can you briefly clarify the benefits of Roth accounts?
Well, a Roth IRA is a retirement savings account that allows for tax-free withdrawals of contributions and earnings in retirement, provided certain conditions are met. Unlike traditional accounts, Roth contributions are made with after-tax dollars, meaning withdrawals, including earnings, are tax-free in retirement if conditions are met. It is important to note the early withdrawal penalties. IRA withdrawals of earnings before age 59.5 or before the account is 5 years old may be subject to income tax and a 10% penalty.
It's crucial to help increase those contributions before the year ends.
Whether you're looking to use your accounts for income or are still contributing to them, it is prudent to review your strategy to avoid any costly mistakes along the way.
Taxes could be one of the largest expense categories in retirement. But what key actions should people consider on their end-of-year tax planning checklist?
Well, we need to focus on efficiency. First, maximize retirement account contributions. Contribute the maximum allowed to IRAs and 401ks before the December 31st deadline to help reduce taxable income for the year. Second, take your required minimum distributions. If you are approaching 73 or older, you must have a strategy for drawing your retirement account down to avoid RMDs and a hefty 25% penalty missed contributions. Third, consider execute Roth conversions before year end to take advantage of potentially lower tax brackets now versus in the future. You can also harvest tax losses by offsetting taxable gains by selling underperforming investments in taxable accounts.
What about strategies involving Medicare and giving back?
Well, for charitable giving, using qualified charitable distributions, or QCDs, can help satisfy RMD requirements and reduce taxable income by donating directly from your IRA to a qualified charity. Finally, review income thresholds for Medicare premiums. You must monitor your modified adjusted gross income to avoid crossing income thresholds that trigger higher Medicare Part B and Part D premiums.
As the year comes to a close, it's crucial to stay on top of key deadlines that could impact your financial strategy. So let's wrap up with estate planning. Many people assume this is only for the mega wealthy.
Well, that assumption is incorrect, Dave. Most people think estate planning is only for the very wealthy, but truthfully, it's for everyone. Without a plan, what you could leave behind could cause hefty legal fees that diminish what you could have been generated wealth, and it can even cause serious rifts in family ties.
What are the key items on an estate planning checklist?
Well, you should itemize your physical assets and document non-physical assets such as bank accounts, retirement plans, and insurance policies, ensuring you list account numbers and contact information. Critically, review retirement account and beneficiaries. Ensure that the beneficiary designations on retirement accounts and insurance policies are current and reflect your intentions. You should also consider transfer on death designations for applicable accounts to facilitate the direct transfer of assets to beneficiaries, bypassing probate. Finally, draft a will. This is a legally binding document outlining the distribution of your assets to ensure clarity and help prevent disputes. Remember to regularly review and update documents to accommodate major life changes.
The truth is, your estate plan can be the difference between giving generational wealth and causing strife in the family. A weak estate plan can squander what you think is untouchable, and a small inheritance can go far if it's protected by an airtight estate plan. Your retirement strategy provides the foundation for your entire life during your retirement. But it's not easy to keep up with the changing financial landscape, in addition to your own situation. And doing it wrong could cost you your life's work in saving for your golden years. So if you want to make sure you seek to get the most out of those years, call us 956-994-0407 or visit us today at mahfinancial.biz. Thank you for listening to the Retire Rich podcast. We'll talk again next time.
Thank you for listening to Retire Rich, Tales of Financial Freedom. Have questions about topics covered during the show? Visit our website at www.mahfinancial.biz or give us a call at 956-994-0407. Don't forget to click the follow button to be notified when new episodes become available. Investment advisory services and financial planning services are offered through Simplicity Wealth, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm, nor does it indicate that the advisor has attained a particular level of skill or ability. Insurance, consulting, and education services offered through M.A.H. Financial. M.A.H. Financial is an unaffiliated entity from Simplicity Wealth. Clicking the like button does not constitute a testimonial for or an endorsement of our investment advisory firm, any associated person, or our services. Clicking the like button is merely a mechanism to circulate our page. Like is not meant in the traditional sense. In addition, postings to our page must refrain from recommending us or providing testimonials for our investment advisory firm. Because the SEC and state securities regulators generally prohibit testimonials, any such postings are subject to swift removal.